Over the course of several decades, Japan's stock market had languished in the shadows, overlooked by international investors who remained wary of its tepid performance, mirroring the country's enduring economic malaise. However, in recent years, there has been a remarkable shift in sentiment, as Japanese stocks have emerged as the hottest ticket in town, exemplified by the soaring trajectory of the Nikkei 225 index, which recently reached a 34-year pinnacle. This resurgence marks a dramatic turnaround for Japan's stock market, which had long been overshadowed by the spectre of its lost decades, following the collapse of a massive asset bubble in the early 1990s. Despite this troubled history, Tokyo's benchmark index recorded an impressive gain of 28.2% last year, comfortably outperforming the renowned S&P 500 index in the United States. The current fervor surrounding Japanese stocks shows no signs of abating, with the Nikkei 225 continuing its upward ascent, recently breaching the 39,000 point mark, a feat not achieved since its peak in December 1989. This sustained upward momentum has been fueled by a confluence of factors, including robust corporate earnings, particularly from technology giants like Nvidia, which ignited a global wave of rising stock prices. In addition to technology firms, pharmaceutical companies have also been major beneficiaries of this bullish trend, with notable gains seen in stocks such as Chugai Pharmaceutical and Daiichi Sankyo. Furthermore, the ringing endorsement of Japanese trading firms by renowned investor Warren Buffett has further bolstered investor confidence, leading to gains in shares of companies like Mitsubishi Corp. The attractiveness of Japanese stocks extends beyond individual company performances, with broader economic factors also coming into play. A weakened yen has provided a significant boost to exporters, enhancing their competitiveness in global markets and bolstering their profitability. Moreover, significant reforms in corporate governance have empowered shareholders, enabling them to advocate for changes that align with their interests and ultimately enhance shareholder value. Perhaps most notably, the shifting perception of inflation in Japan represents a significant departure from the deflationary mindset that had long plagued the nation's economy. Rising inflation is now viewed as a positive sign of economic vitality, signaling a departure from decades of stagnant growth and deflationary pressures. However, amidst the optimism surrounding Japanese stocks, challenges and uncertainties persist. Recent economic data indicating a contraction in the fourth quarter has raised concerns about the resilience of Japan's recovery, particularly in light of the recent earthquake that struck the Noto Peninsula. Furthermore, the Bank of Japan faces the delicate task of navigating interest rate adjustments to support economic growth without undermining efforts to combat inflation. Looking ahead, economists anticipate a gradual normalization of interest rates, with the central bank likely to lift rates out of negative territory while exercising caution to prevent any adverse impacts on the fragile economic recovery. Despite these challenges, the prevailing sentiment suggests that the resurgence of Japanese stocks is likely to endure, supported by a combination of favorable economic conditions, corporate reforms, and investor confidence.